Namaste, my dear friends. Now referring to you, valuation of imported goods followed by computation of duties thereon. Very much important for our coming exam of CMA Inter June 2024 or December 2024 exams are concerned. Now I am referring to you assessable value, how to compute for imported goods and how to compute the duties thereon. Basic custom duty, social welfare surcharge on basic custom duty, followed by the additional custom duty known as IGST, how to compute, and finally I will going to be considered to conclude the inviting the attention on the part of anti-dumping duty, how to compute. All these points now I am going to refer to you for a kind consideration, my dear friends. Now if you refer here, assessable value, nothing but CAF value for imported goods. Here, if you refer your study material, very clearly said that the conversion of value of imported goods into Indian rupees, namely the assessable value of imported goods into Indian rupees. How we will take the exchange rate of CBSE at the time of submission of bill of entry by the importer. As simple as that. What rate of duty will be considered taxable even for imported goods? The date on which entry was granted to the conveyance or the date of submission of bill of entry by the importer. Among the two dates, whichever is happened to happen later, as on that date, rate of duty is applicable. So these are all the points we already covered in the lesson number 3 itself. Now I am referring to you here under lesson number 4, the conclusion part of customs law, which is applicable for a coming exam of CMA Inter June 2024 or the December 2024. Computation of assessable value, namely CAF value of imported goods followed by duties of customs thereon. In this regard, my dear friends, I am bringing you notice first example. Referring here one example. See on the screen, if you refer, one example is there. Example 6. I am referring from a study material only, my dear sir. If bill of entry is presented on 10th October 2023 and the aircraft arrived on 20th October 2023, in this situation, what is the relevant date for determination of rate of duty and tariff valuation, if any, is 20th October 2023. See here, 10th October, one date is the date on which bill of entry is submitted. 20th October is the date on which entry was granted. So among the two dates, whichever is later, which is later, 20th October 2023, as on that date, the rate of duty is applicable. As simple as that, which is a taxable event for a kind consideration, my dear friends. Further referring to you from here, example 8. Assessable value of an item imported is 2 lakh rupees, basic custom duty 10%, integrated tax is 18% and social welfare service 10% on duty. So compute the amount of total custom duty and integrated tax payable. Ignore GST compensation cess. How we can able to identify? What is this? Simple. They said in the given case, my dear sir, stating that the assessable value is given directly, which is 2 lakh rupees. Then they are asking us to find out the basic custom duty. So if you take the assessable value, AV assessable value 2 lakhs. On 2 lakhs, simply we are charging basic custom duty, which is 10%. 10% of 2 lakh is nothing but 20,000. Plus social welfare surcharge, which is given in the problem, is 10%. 10% is basic, sir, on basic custom duty. Social welfare surcharge if not given, no problem. BCD is given, sufficient. We always apply social welfare surcharge on BCD, which is on 20,000, 10%, which comes rupees 2,000. So we got the total duty of basic custom duty with the social welfare such as 22,000. Add to the assessable value, totally 2,22,000, which is relevant for our computation of the additional custom duty, namely IGST. IGST is, if given in the problem, we will take it. Generally, what rate of IGST, what rate of integrated tax, what is the rate of additional custom duty going to levy by Department of Customs means the rate of duty which is applicable in the given for a given product in India, the rate of duty what is applicable. For example, 18% GST is applicable for sale of the laptop. If laptop imported 18%, no sir, I imported, let us say, the goggles where I am liable to pay duty of IGST is equal to rate of duty applicable in India. Rate of GST, namely IGST applicable for goggles 12%. Same goggles, instead of buying in India, if I import, 12% will apply. Sir, if I import the goods which is generally levied nil rate of duty in India, suppose if I sell or buy, IGST is nil. For example, reading material, reading textbooks which I am selling in India, which attract nil rate of GST. Such books if I import it, sir, am I liable to pay integrated tax, namely the IGST on imported goods? Yes, is equal to the rate of duty applicable for the given product in India. What is the rate of duty applicable for the textbooks in India? IGST nil. Same goods if I imported, IGST also be nil for imported goods. Only I am liable to pay basic custom duty plus additional custom, basic custom duty plus social welfare is only liable to pay, not liable to pay IGST, because IGST for a given product in India is nil. Same product if I imported, my product also will attract nil rate of GST, nil rate of additional custom duty in the given case. But in the given problem, what is there on the screen is 18% of IGST is given. Therefore, now I am charging IGST for imported goods, which is 18%. 18% on what? On 2,22,000 rupees. 2,22,000 rupees on which 18% is. If you take, my dear friends, 39,960. So, total duty of customs is nothing but BCD 20,000 plus social welfare charge 2,000 plus our additional duty, namely IGST 39,960. Totally, the duty comes here, total custom is equal to 61,960. As simple as this, my dear friends. Further, referring to you, see, in the lesson number 3, I explained to you how to compute some value, various methods I told you. Now I am going to explain to you the practical examples by inviting from a study material which is applicable for our exam of CMA Inter, coming exam of June 2024 as well as December 2024 examination is considered. I am referring here the problems by inviting from our study material. Thereby, our students can able to have focus attention how to answer in the examination. With a greater intention, I am presenting the particular chapter under lesson number 4, computation of assembly value, followed by application of custom duty, namely computation of custom duties. In this regard, I am bringing notice example, illustration number 9. Now I am reading here. XN company imported some goods from USA for being used in manufacturing of its final product. Determine the exchange rate to be considered for computation of import duty from the following particulars. So, in the given problem, various dates are given. Then 10th October 2023, import general manifest was submitted by the master of the vessel. The 15th October 2023, entry involved was granted by the customs officer. 23rd of October, XN company presented the bill of entry. 31st of October, goods were allowed to be cleared from the customs port. Like that, there are various exchange rates has been given. CBIC exchange rate is given, as well as the here CBIC exchange rate is given, followed by CBIC exchange rate is given. Then here RBI exchange rate is given. So different exchanges are given at different dates. No problem. First and foremost, in the last class I referred by saying that we have to refer only exchange rate of CBIC. Sir, here there are different rate of exchange rates are given, sir. Which exchange rate of the CBIC should be considered, sir? Simple, cool and look. At the time of submission of bill of entry by the importer, what is the rate prevailed? When the bill of entry is submitted by the importer, bill of entry submitted 23rd October. XN company presented bill of entry. As on that date, what rate applicable? So, relevant exchange rate for our given case here is 64 rupees 50 paise is to be considered to convert the foreign currency into Indian rupees to pay the import duty in Indian rupees. Got the clarity, my dear friends? Further referring to you. Example 10, illustration 10 from our study material. Malia Internationals Limited has imported machine by air from Germany. Bill of entry is presented on 20th January 2024. However, entry invoice is granted on 25th January 2024. Relevant information of the transactions are provided as under. CF value of the machine 5,500 US dollars. Air freight paid 1,250 US dollars, followed by the insurance charges paid $100. Exchange rate of the RBI CBSE on 20th October is given. Rate of exchange on 25th of January. First one, point number 6 here is rate of exchange on 20th January 2024 is RBI 65.50 paise, CBSE 66 rupees. The 25th of January exchange rate of the CBSE 67 rupees, RBI 66.50 paise. BCD rate 10%, IGST 18%. Calculate the assessable value in Indian rupees for the purpose of levy of custom duty as well as total custom duty they are asking us to find out. Very simple, my dear friends. Sir, generally in the last class I told you also, as a revision I'm telling you in the lesson number 3 I told you, when there is air freight, if so, such air freight should not exceed 20% of the FOB value of the customs. In the given case, we have FOB value. We have given CF value, not FA value. So we want to find out FOB value. But given value here is CF value is given here 5,500. Therefore, what we have to do first, we have to find out the FOB value. Then on the FOB value, 20% apply. That 20% you compare with the given air freight. Among the two, 20% of the FOB value of the customs or given air freight, among the whichever is less is to be considered for computation of assessable value for payment of import duty, as you are aware of that. So which first I am referring here is given CF value is 5,500 US dollars. Deduct from that given air freight, how much it is? 1,250 you deduct. Thereafter insurance, how much is given? 100 US dollars is given, deduct. So we will get FOB value. That is very important to note. So 5,500 minus 1,250 minus 100. So you will get 4,150 is the FOB value. If that is the value is given, so we will take here FOB value 4,150 plus 20% of the FOB value towards air freight. 20% how much comes here? 830. 830 US dollars are 1,250 dollars, which is less, which is 20% is less. So 830. Then whatever may be insurance is equal to 100. Actual should take. So now we will get revised CF value here 4,150 plus 830 plus 100. Then we will get here revised CF value, which is our assessable value for payment of import duty, which is US dollars. So here 5,080 we got. Dear friends, be careful. In the examination, generally we want to find out the CF value, but in the given problem, CF value is given along with that air freight also be given. If the CF value is given, that is the value. Why air freight is given? It is an indication, hey mister, you have to identify correct air freight while arriving the assessable value, namely CF value. Therefore, the given air freight you should deduct from the CF value along with the insurance. Then you get FOB value. On the FOB value, apply 20%. Thereby, 20% of the FOB value or given air freight, whichever is less, is to be considered. So, be alert, careful. This type of examination questions are going to come in the examination. Now, CF value you got 5,080. Then add to CF value here. No other information. That is the assessable value. Multiply with the exchange rate. Which exchange rate should be considered? At the time of submission of CBIC, at the time of submission of bill of entry, exchange rate of the CBIC. When the bill of entry is submitted, bill of entry is presented on 20th January. So 20th January, what is the rate? 20th January, exchange rate of the CBIC, which is 66 rupees. That is relevant. So 5080 into 66 rupees per dollar. So now we got CIF value in Indian rupees INR, which is 3,35,280. So this is the value. Once we got it, further they are asking us to find out the custom duty also. So we are going to apply now. I will take here separately some space here. I will take here. So we got here 3,35,280 is our assessable value AV, on which we have to apply basic custom duty. What rate is given here in the given problem? Basic custom duty, which is given here how much? 10%. So 10%. So 10% BCD, whenever you apply for input goods, you have to apply on that value. On that value, you have to apply what? The social welfare surcharge, which is inevitable. If you forget, then the answer may be going to wrong. Therefore, be careful. Here the space seems to be here, right here. What is this value? It is nothing but, my dear friends, it is assessable value. Okay, this is assessable AV. Assessable 3,35,280. So now we have to add here basic custom duty, which is 10%. Basic custom duty, on which 3,35,280, on which 10%, which is 33,528. Then on which you have to add, without forget, SWS. In the given problem, SWS is not given. We have to invite it and apply. Whenever there is import duty, BCD is available. SWS, social welfare surcharge, 10% BCD is inevitable, must be applied. So on that 10% on BCD, which is comes here 3,500 and 3,300, 3,000, where it is, 1 minute, I will rewrite again. I will rewrite, my dear friends. Here 33,528, SWS 3,353, because 80 paise is coming, 50% above, coming to 1 rupee. So 3,353 I said. Now you sum up this value, you will get here 3,35,280 plus 33,528 plus 3,353. You will get here 3,72,161. So they are also asking us to find out additional question, namely BC, the IGST. They given IGST is given. Yes, IGST is given. Therefore, 18%. IGST, which is 18% on the entire value of 3,72,161, on which 18%, which is 66,989. So they're asking here custom duty and total custom duty. Total custom duty nothing but BCD plus social welfare surcharge plus IGST, 33,528 plus 3,353 plus 66,989. Total comes here almost 1,03,870, which is nothing but what? Total custom duty CD. As simple as this. Further, my dear friends, referring here, illustration, example 11. Illustration 11, reading as follows. Compute the total duty and integrated tax payable under the customs law on an imported equipment based on the following information. Assessable value of the imported goods $10,100. Date of bill of entry on 25th April is presented. Basic custom duty on this date 10% and exchange rate notified by the Central Board of Indirect Tax and Customs $1 equal to 65 rupees. Date of entry invoice is 21st April. Basic custom duty on this date is 20% and exchange rate notified by the Central Board of Indirect Tax and Customs $1 equal to 70 rupees. Integrated tax 18%, social welfare such as 10%. So in the given case, how to find out the what they are asking under the customs law? Compute the duty, compute the total duty. They said very simple. They directly give us value. So we know CF value assessable is equal to dollars 10,100 US dollars. Then that you convert into Indian rupees. So we want assessable value in is US dollar correct? We want in Indian rupees. Then we have to multiply with exchange rate at the time of submission of bill of entry by the CBIC. At the time of submission of bill of entry by the importer, exchange rate of the CBIC is relevant. It means so at the time of submission of bill of entry, when bill of entry is submitted, the bill of entry is submitted on 25th April. As on that date, exchange rate of CBIC 65 rupees. Therefore, it is relevant. So here 10,100 into 65 rupees, which is equal to 6,56,500. Is assessable value in Indian rupees. Then we have to find out the basic custom duty, which is given here. What rate? There are two different rates are given. Base ED here they given one rate 10%, thereafter 20%. Which rate applicable? We have to invite the taxable event for imported goods. Earlier I referred to you in our lesson number 2 itself. I have been highlighted very clearly by saying that taxable event for imported goods. Taxable event for imported goods nothing but date on which bill of entry is submitted or the entry invoice granted, whichever is later. Because that time I referred to you technically by saying that taxable event nothing but at the time goods at the time of crossing the customs barrier. Goods crossing the customs barrier is a taxable event, which is simplified by saying that at the time of submission of bill of entry or entry invoice granted, whichever is later. Here, entry invoice granted when? Entry invoice granted on 21st April. Bill of entry submitted when? 25th of April. Among the two, whichever is later, 25th of April later. As and that, what is a BCD? 10%, that is applicable. Whichever is later, 10% is equal to how much comes? 65,650. Then 10% of social welfare such as on BCD 6,565. We got it. Now further, they're given here IGST is given. So IGST is on the total value. Therefore, first we have to find out total value. 6,56,500 plus 65,650 BCD plus 6,565 social welfare charge, total equal to 7,28,715. 715. Got the clarity, my dear friends? 7,28,715. On that value, we have to find out IGST, which is they given here as 18%. 18% is on this is equal to is how much? Which is almost all 1,31,168.70 paise. Therefore, I will round off to 1 rupee. So is the value. So what is a total custom duty? Total custom duty is nothing but BCD plus SWS followed by IGST. So here IGST plus our BCD, which is equal to total custom duty is equal to here 2,03,384. As simple as this. Got the clarity, my dear friends? Further refer to you. Excellent problem it is. This problem need to be answered properly because the given material, some zigzag answer is there, irrelevant, that is, we will go with the correct principle applying and we find out the answer. Illustration 12. Referring here, RPG Limited imported 125 units of minerals from high sea for sale in India. Selling price is exclusive of duties and taxes. Freight from port to depot in India 2530 and insurance 310. Sale quantity is given 80, 60, 30, 100, 50, 70, 10. Unit price 105, 90, 105, 100, 95, 90 and 105. They given the different quantities at different rates. Basic customer duty 12%. Assume the rate is, assume there is no IGST applicable for the given product. You are required to calculate the total custom duty as per the rule number 7 of the Customs Valuation Determination of Value of Imported Goods Rules 2007 as amended up to the Finance Act 2023. So how to find out this? Is nothing but what? Deductive value. In the last class lesson I told you how to compute deductive value in the case where the goods has been procured from high seas. In that case, different quantities at different selling prices. So wherever the selling price is repetition, you please add that selling prices. You please add that selling prices. Here if you refer 105, one time repeated, 105, second time repeated, 105, third time repeated. So it's quantity you sum up. So how much here? 80 plus 30 plus 10, which is 120. So I will write here if the time space permits. I will write here, sir, space permits. Here I will write somewhere the other quantity. Here I said no 80. Yes, I will write here. Here I will write. I will write here 120 units. Selling price per unit 105 rupees. Okay. Thereafter 90, how many times repeated? 90 here once, twice, one time, two times, 90. So how much is 60 plus 70? 130. 130 units at the rate of 90 rupees per unit. Thereafter 100, only one time appeared. So 100 appeared only one time. 100 units, 100 rupees. Thereafter 50 units at 95 rupees. That's all. So like that different quantities are given at different rates. So we summed up wherever the price is uniformly repeating, its quantity we add up. We added also. Now highest quantity how much? 130 units. What rate? 90 rupees. That 90 rupees selling price should be considered as a base. So we got 90 rupees selling price. Number of units procured from high seas, how many? High seas procured from how many units? 125 units. So 125 units. 11,250, which is our sale price, sale value. From that deduct post shipment expenditure 2,530 freight and also deduct insurance 310. Then you will get here 2530 minus 310. You will get here 8,410, which is our assessable value. 8,410 for the given case to pay duty. If BCD on what? On 8,410. So here there is given BCD is given 12%. Therefore I will going to apply here. So I will take here the space 8,410, which is in Indian rupees. Therefore multiply with the basic custom duty 12%, which is our BCD 12% is equal to 10,092 plus what it is, sorry to say, 8,410 multiply 12%, which is nothing but, see, 8,410 multiply with 12% BCD given there, which is equal to here 1,009. So wherever BCD for import goods, add 10% of social welfare on BCD, which is 101. So here rounding off to 1 rupee. So we got total custom duty. How much here? Which is nothing but 1110 is our total custom duty. As simple as this. Further, my dear friends, then the problem, the repetition problem. This particular problem is repetition. The earlier what I did is repetition. So easily you can identify. So right now we go to case study problem. One problem is given here. Case study problem. We'll take up this case scenario. Only one case scenario is given. Maybe in the examination going to come this problem. Therefore, here it involves the anti-dumping duty. So it is important for our exam point of view. I will take up this to apply. Here, case 1. A commodity is imported into India from a country covered by a notification issued by the central government under Section 9 capital A of the Customs Tariff Act 1975. Following particulars made available. Assessable value of for levying the basic custom duty is 6,31,250. Quantity imported 250 kgs. Basic custom duty 10%. IGST 10%. As per the notification, the anti-dumping duty will be equal to the difference between the cost of the commodity calculated at the rate of $50 per kg. Exchange rate $1 equal to 70 rupees, and the landed value of the custom duty as imported. State the amount payable on account of basic custom duty, anti-dumping duty, IGST. Very simple. Sir, here what is the newly asked us to find out here is anti-dumping duty. First and foremost, understand our valuation chapter of GST, section 15, we referred valuation where all duties and taxes should be added except the GST taxes while computing the GST. So, first we have to compute the BCD, social welfare surcharge, anti-dumping duty. All we have to add in the assessable value, then you apply the IGST. In that case, very simple. First of all, you take here assessable value directly is given 6,31,250 Indian rupees they given. Then add to that basic custom duty. Add to that basic custom duty, which is given here. How much here? BCD 10%, which is 63,125 plus social welfare surcharge, which is 10% on BCD 6,301.23 because rounding off the nearest 1 rupee. Now we will get here the value. Here how much we got? 6,31,250 plus 63,125 plus 6,313, which is equal to 7,688, which is also be called as landed value. Now we have to add the anti-dumping duty. Anti-dumping duty, how to add? What is anti-dumping duty? Anti-dumping duty means if I bring the goods from a country which is dumping in India, their goods, Department of Customs with the from the confirmation of the Government of India, they will levy the anti-dumping duty, saying that the market price of the imported goods and land value, the difference is equal to anti-dumping duty. For example, buy one get one is a competitive market. Buy one take 20 freely is a competitive market, cutthroat market. Like that, goods are dumping in India. Then 20 units market value minus the land value, the land value for which you imported. The difference is anti-dumping duty. Here, land value including BCD, social welfare is equal to 7,688. So, anti-dumping duty is equal to market value minus land value. That is equal to anti-dumping duty. That much will be levying because otherwise the Indian market will be get affected. Therefore, the government says that anti-dumping market value how much for imported goods? They have imported 250 kgs. Very good. Each kg how much exchange rate? They 50 kgs per unit, per kg 50. So $50. So how many dollars totally they importing here? Value of the goods means here this is the $50 per kg. $250. 250 kgs. 250 kgs into 50 is equal to 12,500 US dollars into exchange rate here how much given? 70. So into 70 rupees. So market value we got. Market value 8,75,000 minus land value 7,688. So 7,688. The anti-dump equal to 1,74,312. The difference between this market value minus land value, which is 1,74,312. This amount equal to anti-dumping duty. Then you add all this. So we got here 8,75,000 is the value of imported goods after adding all duties and taxes except GST taxes. Now apply IGST. What are given here IGST? They given IGST rate also given 18%. So 18% on what? On entire 8,75,000, 18%, which is 1,57,500. So total duty is nothing but IGST 1,57,500 plus the anti-dumping is 1,74,312 plus our BCD 63,125 plus SWS 6,313. Total custom duty is equal to 4,01,250. So basic custom duty we know 63,125. Anti-dumping we came to know 1,74,312. The IGST we also worked out 1,57,000, 1,57,500. So 1,57,500 is nothing but our ITC also in the GST law. If the importer bringing that goods into India for further sale purpose B2B transaction, this 1,57,100 allowed as a ITC. You can claim input tax credit here. Got the clarity, my friends? As simple as this. All the best for your examination of June 2024 or December 2024 examination is same applicable. Is clear? Any doubt? You can comment me. You can write comment. I am there here to reply through WhatsApp or through comment in the particular comment box. Is clear, my friends? All the best to one and all. Thank you. Thank you to one and all.